In the crazy, fast-paced world of trading, it's so easy to get lost in the noise of the lower time frames. But what if I told you there's a map? A map that cuts right through the chaos, a map that most traders completely ignore. Well, today we're uncovering that secret, the monthly chart. Hey everyone, welcome to AI Explains ICT. In this video, we are diving deep into ICT's core content, specifically from month 3, episode 4. We're going to unlock a really powerful skill that can bring a whole new level of clarity to your analysis. So every single trader asks this question at some point. How do you find your bearings when the charts just look like complete chaos? How do you figure out which way the market is really trying to go beyond all that short-term, day-to-day noise? Well, the answer, according to ICT, is hiding in plain sight. It's on the highest of time frames. It's the one chart that gives us the absolute clearest picture of what the big institutions are doing, and that's the monthly chart. This is literally where the big money leaves its footprints. Okay, so let's start with this foundational idea. You need to think of the monthly chart as the smart money's map. It's way too slow for most retail traders, which is why they ignore it. But for the big institutions, it's the perfect canvas for them to paint their long-term intentions. And just think about it for a second. You and we can't create these huge month-long price swings. No way. That takes an enormous amount of institutional capital. So by learning how to read these specific candles, we're basically learning to read the minds of the market's biggest players. All right, so how do we actually use this? Well, it all starts by defining the current battlefield, the trading range. And you're going to be surprised at how simple this process actually is. It's really just a simple 2-step rule. First, you look at your monthly chart and find the most recent down close candle. Got it? Okay. Second, you find the last up close candle where its entire body is above the high of that down candle. That's it. Those 2 candles right there define your institutional trading range. So here, you can see the down candle defines the low of our range, and that up candle defines the high. Now, everything happening in between is framed by these 2 key institutional reference points. You've just defined the market's playground. Okay, so once we've got our range marked out, the next step is to figure out which side is in control. And we do this by watching for these very same candles to become activated as either bullish or bearish order blocks. Now, before we go any further, let's just make sure we're on the same page about what an order block is. Just think of it as a specific price level represented by a candle where the big institutions have previously shown a massive concentration of buy or sell orders. So when price comes back to that zone, we should expect a similar reaction. Now, this is absolutely crucial. A candle is just a candle until price activates it. So if price breaks above that down candle's high, boom, that candle becomes a support level, a bullish block. And if price breaks below the up candle's low, you guessed it, that candle becomes a resistance level, a bearish block. It's really that simple. Theory is great, right? But let's see how this stuff actually works on real charts. We're going to walk through 3 different currency pairs to see this top-down approach in action. This is where it gets fun. All right, first up, let's take a look at the US dollar versus the Canadian dollar. This is going to be our bullish scenario, where we'll see a down close candle get activated and turned into a powerful support level. So after we identify that monthly range, we drop down to the weekly chart. Now just look at this. See how price returns perfectly to test that monthly down candle? It's now an activated bullish order block, a super clear support level. And what happens? Price expands away from it aggressively. Beautiful. Okay, next up, the US dollar versus the Japanese yen. This example is a perfect illustration of the full top-down process, from the highest time frame view right down to a potential entry. We always start on the monthly chart. We find our range, then we see that price breaks above the down candle's high, which activates our bullish order block. This entire zone is now our key area of interest for looking for buys. Now, we drop down to the weekly chart and just watch what happens as price pulls back. It is a precise retest of our monthly support level. This is the market confirming our high time frame analysis, telling us we're on the right track. And finally, we zoom into the daily chart, and this is where the execution happens. You see that sharp dip right into our high time frame level. That provides a crystal clear, low-risk entry to ride that institutional move higher. This is top-down analysis at its finest. Okay, for our last example, let's flip it around and look at a bearish scenario using the New Zealand dollar, also known as the Kiwi. So here, we see the exact opposite setup. Price trades below the low of the most recent up candle. And what does that do? It activates it as a bearish order block. It's now a powerful ceiling of institutional resistance. And then on the daily chart, the story is just crystal clear. Price rallies up to perfectly test that monthly resistance zone and is then sold off aggressively. You see, the monthly chart gave us the bias, and the daily chart provided the opportunity to act on it. So, we've covered the theory, and we've seen it in action on real charts. Now, let's put it all together into a simple, actionable blueprint that you can use to analyze any market you want. Here it is. This is your top-down checklist. You always start on the monthly to define your range and see which order block is active. Mark that level. Then you drop to the lower time frames, the weekly and the daily, and you patiently wait for price to come back to your key level for an entry. And what's your target? The opposing side of that monthly range. It's a complete model for framing the market. And that's really how you can use the monthly chart to gain a serious edge. By focusing on where the institutional money is moving, you filter out so much of the noise and you align yourself with the market's true direction. If you found this video helpful, do us a favor and hit that like button and subscribe for more ICT concepts. And if you have any questions at all, drop them in the comments below and a real human will get back to you. Safe trading, everyone.